Good morning, everybody. Thanks very much for joining us this morning. This is one of a series of events that we've been running, and this one's specifically focused on French senior living market, an outlook for that and where that's heading. My name is Richard Betts. I'm the group publisher at Real Asset Media. We run a series of events, newsletters, magazines, TV, and also one of the reasons that we're particularly interested in this topic is that we also run the Senior Housing and Healthcare Association, designed to bring people together and share knowledge, resources, create more transparency into the market. And please do look at that. It's shha.international if you're interested in that. Please feel free to look at the website and you can learn more about that. We've been running a whole series of new initiatives during this lockdown period to help the industry stay connected, realcast on a weekly basis, special reports, and also moving events like these online so that everybody can join, irrespective of where the speakers are or indeed where you are as attendees. We're also launching a new initiative called RealX Global, which will be a virtual exhibition and conference on the 17th and 18th of September, and again in January. And those are designed as a way of kicking off the market after the summer break and the winter break, and just from wherever we are in the world, being able to come together irrespective of our time zones and our focus. Really super panel here for you today. We've got Arnaud, Fety, Samuel Vetrak, and Frédéric. Let's just do some introductions. Maybe let's start with you, Arnaud. Just give a kind of brief introduction of yourself and the company, and then we'll come to you, Samuel.
Yes, I'm Arnaud Fety. I'm head of the sales for the institutional investor. And we are very proud, Domitys, to be the French leader. We are both developer and operator for senior living. And when we speak about senior living, we mean no medicalized, for sure. That's very important because there are several kind of nursing home, special service residence, or well. So Domitys is working in France, is very active with 120 residences and a huge pipeline. And now we have some residents in Belgium, Italy, and Mauritius.
That's super. Thanks very much. Samuel.
So I represent BONARD as a CEO. We are a market research and advisory firm, originally for student housing, but we are sort of covering the other rented residential asset classes like senior living. We are a global firm with offices and teams in Europe, Asia, Australia, Latin America, North America. Our data is independent and certified, and we use not only the secondary sources, but primary sources and infill units for data collection.
That's great, Samuel. And it's been really interesting also just to see how BONARD has developed over that period of time and grown. Frédéric.
Hello, I'm Frédéric, president of Mozaic Asset Management. Mozaic is an asset manager specialized in the healthcare space, real estate, healthcare, broadly going from clinics, acute care to nursing home, as Arnaud was mentioning, up to senior residence. And we are, managing over 250 million of assets across 4 geographies today. Hopefully expanding also into in Europe, France, Germany, Italy, and Spain, and hopefully expanding into Netherlands, Ireland, and Portugal this year.
Great. Maybe just starting with you, Frédéric, just before Samuel does, gives us the presentation. What was the aim of this? Because I know you worked together with BONARD on this.
The idea as asset manager is of course to try and be as knowledgeable as possible about the market we concentrate on. As a former, nursing home operator, I have the weakness to believe that it is a market I know quite well. The senior residence market, assisted living market, I have of course looked at it as well as in my time as operator and of course in my time also as asset manager, but I had the feeling that it is as all nascent markets, it lacks, data, it lacks transparency, and because it is such a formidable, growing market, I thought that it needed that level of information in order to make investors maybe more confident about this market and understand it better. And also, in a way, I think the more you bring data and information to the market, you also help maybe investors not making mistakes, understand the differences, and I think by helping them not making mistakes, of course, you contribute to the success of that market, because as all markets, when if there are sort of failures, etc., it can provoke reactions among investors. So the interest really is to help that sector to grow, and we are really at the beginning of a long curve. But as all markets, we need to know what we do and why we're doing it, and understand the differences between operators, between specific markets, between cities. Bring metrics to that market in terms of price per square meter, rent per square meter, service given, etc. Because there is a variety of models. Arnaud will, I guess, speak about their model, and they have been, of course, very successful. And I think it's quite fair, given the leadership that Domitys has in that market, that they are with us today to talk about this first report. But there are, of course, other models, and hopefully that will be all as successful as Domitys. But it's also important to understand the differences and bring that level of transparency. And as you said, Mozaic is also co-founder of the Senior Housing and Healthcare Association, and this is our objective is to bring that transparency and information to the market. And the story with our partnership with BONARD is that I knew BONARD for the work that they are doing, and they have been doing specifically on the student market. And I think that they had this level of excellence and exhaustivity, sort of methodological approach that was necessary to bring that level of confidence to the senior market.
Okay, great. So why don't we kick off, Samuel? If let's look at some of the data. Let's look at some of the research.
Let me highlight some of the things. This is really first of a kind of initiative to bring this level of exactness and thoroughness. We used over 100 sources of information, secondary sources of information that we looked at, evaluated, and used where it was legitimate to use it for the context. But we accompanied the usage of 100 secondary sources with the primary research. So we did a direct outreach to the private residencies and statistical offices via phone and email. And so that's what adds the depth and thoroughness. And we had a team of about 10 analysts on this from February to April 2020. And we followed the code of conduct of SMR. So the error margins are really low, below 5%, and the confidence level over 90%. So the ambition was to bring data, exactness, and transparency to the sector, which is sort of enabling current and future stakeholders to carry less risk. And it is also an invitation for investment in this more transparent and less risky sector. Then, first of all, the senior population in France is growing, so there is more demand. In the segment of 60 plus, the increase will be more than 7% over the next 5 years, and in the segment of 75 plus, it's 4%. Definitely, the research identified the fact that the demand is stronger than supply or pipeline. and the sector is in a very good condition for the years to come, and we will see more data. There are about 8,000 establishments for dependent people in France with 640,000 beds. But what is more important, we segmented out, and we will offer you the definitions later. We segmented out 3,000 assisted living establishments, among which there are just over 600 serviced residences. I have to say that we mapped out only top 20 city markets or markets in France. The initiative would take too much resources, time and money to do all France and all the little towns and cities. So we did top 20. So this is France as a top 20 cities. And in those we found these 600 service residences. Then the private residences are mainly located in suburbs. Not that there would not be a desire to have them in more urban areas, but the scarcity and rise of value of the land or the buildings to convert is as high as it is very difficult to compete for senior living with other asset classes. So that's why most of the product is actually located in suburbs. And as regards new location for assisted living establishments, which we call senior living onwards, the providers are sort of showing most of the interest in the cities that you see, Angers, Lyon, and Toulouse. And we look at the pricing, as the rental levels. So average monthly rate for a single studio in a private residence, which was the benchmark product we measured across the properties, is about 1,090 euro per person, and average square meters per studio is about 28 square meters, which means that we're talking about 39 euro per square meter as an average in France. These are key findings. So let's dive deeper in the details of demand, supply, rental levels, pipeline, and future demand. What's the most important fact here is that we will, in next 30 years, we're going to see 48% increase in the 65 plus population. And as you can see, within EU, France is sitting somewhere in the middle when it comes to what's the share of 65 plus aged people in a total population. On the right, you can see that what's the proportion of the total population out of the total population, and now and in 2070. So what's the trend? So the total population will not necessarily change much in Europe and in France as well, but the working age population will shrink. Okay, more analysis over here. So we can see the immediate past and future of the demographics of different age groups. So this is the total population, and this will grow in between 2014 and 25 by 1.9%. Then when we look at the age groups over here, so this is the age group of 60 to 74, which will grow from 14 to 25 by 25%. And these are the future seniors with 75 plus, with an average life expectancy in France being 82.5 years age. And this is 75 plus, which will grow by 4% in between 2014 and 25. So we see that there is only growth. I think this is quite a no-brainer and a common knowledge. It's just that how much. And we see that 75 plus is already growing strongly, and in beyond 25, this new age group will come to the target audience, and the growth will be even stronger.
If I may just here add something, the 75 plus is the data that is provided by the INSEE, which is the National Statistical Office in France, and they don't have statistics over 75. And what is important to understand, I think, for the audience is that the key targets in terms of age for the senior living market is the 80 plus, and I think Arnaud will maybe comment on that later. But the average age of entry in a sort of senior residence is 80, maybe 82, 83. If you compare that to the average age of entry in a nursing home, would be maybe 85. So this is really the target group, is really the sort of 80 plus. And among those, people, you have the dependent people who would, and really dependent people who would go into nursing homes, and you have the sort of less dependent people, or autonomous people with some maybe frailty or something that has happened to them in their life, loss of partner or husband or wife, and need for social life, etc. And this is the target market for senior living.
So this is demand for senior living in France in general. So top 20 cities with the highest concentration or number of people age 75 plus, and that's how we selected the top 20. And you can see not only the overall demand as a snapshot, but also over the years, again 14 to 25. And you can see the biggest or the cities with the biggest numbers also have the biggest and highest growth. So Paris, Marseille, Nice, Lyon, Toulouse, etc. are probably the best prospects. And the later we are in the last 10, then the growth, the numbers are smaller and the growth is also more marginal. And this will play a role in a further analysis of the future potential investment spots. So this is the overall analysis of living conditions of seniors in France. So as you can see, the share of seniors reporting poor health decreased from 22 to 14 in the period between 2008 and 15. So the overall health conditions are improving. In 2015, under 2% of people aged 65 to 74 lived in establishment for dependent people. But when we come to 75 plus, the share is 8.8%. Then interesting fact, 75% of seniors who reside in nursing homes do not like living among the dependent seniors. So the function of the assisted living properties might be by different motivation. The majority of people age 65 plus consider home support services essential, and most seniors in France live alone. So with 50% no longer having active friendship connections and 41% maintaining limited contact with their children. Also, suburbs and urban areas differ by level of isolation. So urban and rural areas, and this is caused by different factors like the neighborhood relations in the cities, as well as the irregular transportation and service provision in the countryside that might be available or not. These are the definitions, and perhaps we can dwell on this for a while. So we took all possible sources and resources. We had very long conversations internally with Frédéric as well. And basically from all types of senior living, this is how we categorize it. So senior living establishments for dependent people, and we did not measure them in this research. Then assisted senior living establishments, which we measured only the service residencies, so the private product, private non-profit and private commercial service residencies. That was the subject of this report. And then we have independent senior living, which again we defined, we separated out, and we didn't measure in this report. So this report is really focused on 2B, if I can say so. So these are the service residencies in private hands, being non-profit or commercial residencies.
It is very important to understand exactly what we are measuring, and particularly, and we'll talk about this later, as we go into different countries. The definitions are could be different, and this is the product of history. It's the product of regulation. And so, but here I think we are quite clear I mean, I hope we are quite clear as to what we have measured. And it is actually really the segment that is growing, and that is addressing the market, this sort of non-dependent autonomous people of 80 and over.
So in France, there are nearly 8,000 establishments for dependent people, as I mentioned in the overview of key findings, with 640,000 beds. But we focus on assisted living establishments, so about nearly 3,000 of them, which is over 600 service residences. And that was the focus of the research. The 10 main providers of private commercial service residencies cumulatively manage over 65% of such residences in France, so the accumulation is quite unique. And you can see the main players and number of establishments in their portfolios on the right. So as you can see, this is a very detailed slide. It shows basically the name of the city, the number of people aged 75 plus, number of establishments in the city, number of apartments, and then provision rate. Provision rate calculated as the total beds versus total 75 plus population. And based on that, we can see the saturation of the market. And compare the cities and compare them not only to each other but also historically when we factor in the pipeline and see how the overall provision rates and how the market saturates, which we will see later on. What you see on the left, this is number of assisted living establishments, both autonomy and service residencies. On the right, you can see only service residencies and provision rates. When the service residencies compared to the total market or total demand in age group 75 plus. And in the report you will see not only the map but also the bar graphs and charts and an analysis of that. And you will see that basically the biggest cities by demand, which is Paris, Lyon, Nice, Marseille, Toulouse, and Bordeaux, have actually the lowest provision rates. So when we look at on the right, it's like Paris has 0.1%, Lyon 1.5% provision, Nice 0.5%, so Marseille 0.7%. So these markets are not only the strongest by demand, but the lowest by supply.
It's quite important to understand that, of course, autonomy residence, again, as we showed, it's part of the definition of, places, facilities that cater for, autonomous old people, autonomous people. But it's really important to understand that this is the product of history, and it's a social product, and it's a completely different environment than the one we're talking about, as in the service residence. Of course, there are some new autonomy residents, even though quite limited, but most of the stock is very old, very low level of service, and catering for sort of a more social population, as opposed to this sort of assisted service residence that we're talking about, which is a completely different market, a lot of services in some cases, not always, and more recent buildings and facilities.
As I mentioned, we measured those 600 buildings, and we put them not only in our data sheets and all the KPIs that we measured about them, but we also created the online interactive map that is part of the report. And I will now sort of switch to the online map. So this is how we created it. I apologize for the language translation, but our IT guys couldn't resolve it. See all the properties in all kinds of segments that we defined. And over here, when you then click on each particular property, it gives you the details of what is it, the address, website, ownership type, and all the KPIs, number of places, and whatever is available prices. So this is quite detailed about every single building within the top 20 cities. So you will see the private commercial service residencies, private non-profit, private non-profit autonomy, and public autonomy residencies for over here, Paris and Bordeaux, but the entire France is mapped out now. Product and price. We look at the studio, 1-bedroom, 2-bedroom apartments, and also the square meters and prices for all of them in all the cities, and all of that is in the report. We don't have the room to look at all of this now, but over here we feature the combination of the product and the price for a studio as a benchmark product and per city. So as you can see that it can go anywhere from 671 euro per studio and month up to almost 2,000 euro in Paris. The price is featured as it is available to end customer. So even though in our research we usually distinguish what is included and not, and we segment it out and we do a sort of a consolidated price, but over here we measure it as available to customers over 101 establishments. And so sometimes it includes VAT, sometimes doesn't, utilities, meal plans, etc. So you need to take it into consideration that sometimes it might not be necessarily apples to apples, but for the end customer, this is how it shows. And as you can see in Nice, you will see in the report, in Nice the price for 2-bedroom apartment may go up to 4,000. In Paris, the single studio 2.2 thousand per month, 2-bedroom apartments for 4,700 per month. So these are the benchmark prices that we find in the private product. Now a bit more about product and price, to dive a little bit deeper to the different type of products: a studio, 1-bedroom apartment, 2-bedroom apartment at various operators. And that's really important because it depends what are the square meters in each. And then we compare it with the price. But what we learn is that the average square meters per studio is about 28 square meters, for 1-bedroom apartment 40 square meters, and for 2-bedroom apartment 55 square meters. When it comes to the facilities, amenities and utilities that are offered within the buildings, which is the graph on the right, we can say that from basically over here, so from the these bars are the access to the hair and beauty salon up until here to entertainment. So 2/3 of the properties have these services. So this is sort of pretty much a common for all the properties. The other third, which is basically from here, so balcony, gym, fitness, game room area, multifunctional room, this is, you know, occasional. And the last third, so basically the wellness facilities, so swimming pool, spa, wellness, physiotherapy, sauna, is pretty rare. So very, very unusual when it comes to other facilities.
Assisted living or senior residence, the pricing refers to, you know, of course, the rent of the apartment and will depend on the size of the apartment, but it also comes with some basic services, and some of them, you know, were mentioned by Samuel, you know, on the left side of that chart. And, you know, there are access to the common areas, security, you know, 24/7 sort of receptions, parking, access to a restaurant, access to, you know, TV, etc., and some sorry, amenities like hair salon and things like this, and gym and fitness, and potentially also access to some spa areas if there are. But, you know, then it's an a la carte sort of services, or you know, you have different formulas, and of course the pricing that we have referred to do not sort of include these a la carte services. We're only talking about the sort of the minimum package that you have to contract in order to get into these residences.
So these are some examples of the product, and to see some examples that we're talking about: private, modern, usually not later than not longer than 10 years product coming to existence, with a communal areas and the rooms upstairs, with some facilities outside. The product slightly differs in let's say niche or sea locations, and then city locations, and then rural locations. But pretty much by structure, the product is very similar, and as you also could see on facilities. So then we look at the pipeline. There are about 248 assisted living establishments for senior people in the pipeline in next 3 years, which represents cumulative capacity of 14,500 beds that are under construction or then in planning later on by 2025. So this is all known pipeline in construction in the next 3 years or in planning in other 2 years. And the key message is that the pipeline is not as strong as the demand growth, and this will basically come short, even though the pipeline seems quite strong. The average size of the building is though 59 beds, as you can calculate from this, so the relatively small properties are coming to the market. Now, pipeline per city, to see how the supply and demand dynamic will change over time, and examples from 3 cities. So we put together all the pipeline coming to these 3 cities. So let's take Lyon. So about 2,000 beds should come to the market this year, this and next year, and then we have 2022 and 2023. So altogether, the pipeline will add 2,200 beds. When we look at right at Lyon, in the middle light blue line over here, you will see that overall provision will not change because the demand will grow at the same level. So the sector is in a really good position. And all the new pipeline should be pretty safe, and we compare it to other rented residential asset classes like student housing, co-living, or BTR. This is actually quite a comfortable situation for years to come. Not to say that after 2025 there is a stronger cohort of the 75 plus coming to the market. So we look at the transactions in recent period. 70% of them in France are domestic, so the domestic buyers and investors for the French product. So it's not, the capital and liquidity is not as international as it is in other rented residential asset classes so far, where over 50% of capital is coming from a different country. But this is some kind of an overview altogether with the brands and particular transactions and the yields in France, and compared to other asset classes, and then comparison to other countries on the bottom right, as you can see. The yields are relatively low already, so the market is can be considered as mature. Demand is strong. Number of people 75 plus is expected to increase by 250,000 in the next 5 years. The research has intended to measure the 433 assisted living establishments in top 20 cities, while there are 600 in total. The total capacity of the measured stock was 26,000, pipeline 14,000, so the pipeline represents 50% of the existing stock coming to the market in next 5 years. And then with the development of the 75 plus people and the pipeline of supply, we can clearly see that there is a lack of supply in the years to come. When we compare it down to cities, then Toulon and Nice provide the best opportunities when we factor in the demand growth of demand, supply, and pipeline, and the overall provision that these two cities mathematically create the best opportunity. However, Paris poses considerable opportunities in terms of volume. So still, it's a larger number of people age 75 plus. The most relatives are close by. The most demand is there. The highest increase of target audience is in Paris, and the provision rate is still very low, 4.2%. And then after conclusion, I would only say that I want to thank Frédéric again for being partner within this research, helping the market to be more documented and transparent. And I want to thank our team that pioneered the thorough research of this market. We plan to continue and go deeper in France and to go wider in Europe with these researches, which I let Frédéric to talk more about, and also not only to provide the general country data, but to offer assistance individually to particular groups to do underwriting reports, city reports, customer surveys, preferences, etc., to help them minimize the risk and maximize the profits.
I think that the last couple of slides are really, quite important, and really the reason why I think we're trying to bring that sort of information to the market. We have identified about 600 residences and identified a stock of 240. As you said, it's quite a large pipeline compared to the existing stock. We have seen that the pricing in terms of yield goes from maybe 4.5% to 4%, and I think we see that there isn't a lot of sort of differentiation in terms of pricing, where, as you have seen on the map, as you have seen in terms of the different services that are offered, that there is a big variety in terms of who are the operators, what is their sort of localization, how they are localized compared to vis-a-vis the city center, or the segment of population, future population, etc. And so I think that, I'm hoping, or I don't know if I'm hoping, but I think it should be, in a normal market and transparent market, I think there should be more pricing differences between a product that would be perceived as being in the right location with the highest sort of expected population number, offering I think a lot of services, vis-a-vis maybe a product that is less competitive, less well positioned, different services maybe not completely adapted to the population it is serving. And I think this is what we're trying also to flush out with this report, and hopefully also with future report, is that is to bring that granularity that I think is important, and will enable investor to have different pricing by being able to compare the products. And as Samuel mentioned, of course, this is the first report. We have identified 430. We know there are 600. We have focused on the top 20 cities, and as Samuel said, if we want to go broader, it will takes a lot of time, because we want to be as exhaustive as possible. And step by step, we will do that. Hopefully, we will increase our sort of coverage and in France. And I think we have another slide showing that we have already started working on the German market, hoping to come out with a report on Germany at Expo Real, which will be a hybrid Expo Real this year, but we will be there and coming out with a report on Germany, and hopefully have a sort of a rendezvous every year for the French market, the German market, and then hopefully other European markets, to really expand and go deeper in our understanding of that growing market.
I wanted to pick up first of all with you Arnaud, because obviously there's been a lot of focus on senior living, nursing homes, particularly with the crisis. Obviously, the senior members of the population have been more susceptible to, in some ways, which has created great challenges, I think, for the industry. I think it would be good, given that you're also working across border, good to get a sense of what was happening in France, what you're doing, and also how that's reflected in the other areas in Europe that you're working in, Arnaud.
Of course, this pandemic was for everybody terrible, and it was quite interesting to see what could be the difference between the nursing home and the non-nursing home. Because we talked during this very interesting conference about senior living, about assisted living, about service senior residence, and I saw that some guests asked, what's exactly the difference? So I think we have to explain to our guests that the senior living is not the assisted living. Meaning, for example, when we spoke about this market in France, we are targeting people from 75 and plus, non-dependent, meaning they can cook, some of them, they've got their own car. So it's a special population, non-dependent. And if we share our opinion concerning the difference between the nursing home and the non-nursing home, we saw very bad information on TV during these 3 months concerning the nursing home, and that the whole people pass away. A lot of people pass away, and it's very different between nursing home and non-nursing home, because in nursing home, first of all, we are talking about rooms, not apartment. In senior living, we've got apartment, not rooms. So you can imagine when the COVID-19 is coming, how it's very difficult to split a room in 3 different pieces just to isolate the 3 old women, for example. In the senior living, they have their own apartment, so it's easier for the team to create a bubble, if I can say that, for the seniors. The other things not to have to remember is the average in a nursing home is about 18 months for an old people, because if he's coming in a nursing home, he's got some problem like maybe Alzheimer or what else. The population of the senior living, they have no pathologies. They are in good condition. For sure, they are old, some problem, not to hear or to see, but they are in good condition. So, concerning the senior living, and of course Domitys, because I'm working for it, we try to take a very hard measure before the government asks the people not to go outside, meaning that we close very quickly, I think end of February, our residence to external people. We close the restaurant, and we deliver the meals directly to the apartment. So we took a lot of measure, and cross fingers, we didn't have huge problem with the COVID-19 in our residence, because first they are big, so there are a lot of common space, and we were able to keep good relation with our client, meaning that, for example, the staff went out in the garden just to make some gym lesson, and the people were staying at the balconies. So not the same picture, and no misunderstanding that between the nursing home and the senior living. They are totally different.
Okay, that's great. I just want to delve into some of the questions here. So these benchmark prices are not including any services or F&B or utility costs. Is that right? That was one question.
May I answer?
you may.
Okay, thanks. Yes, yes. Just to clarify, because we are looking for some tenant, because in France that's mainly a build-to-rent model, which is not the case in UK. It's very often a build-to-sell. So we have tenant. For example, as a study mentioned, a studio, but 25 square meters, for example, in a medium-sized city in France, in Domitys, could be more or less 1,000 euro per month. This is the rent, the price for the rent. But in this price, we include, sorry, the service charge. They have the Wi-Fi, and we in Domitys, for the price, we propose 50 activities per month for free, included in the rent, meaning that we take the senior to the museum, we take them to the supermarket, we invite some people, they have aqua gym lesson in the pool. So just for our guests to understand that when you pay 1,000 euro, it's not only the rent, but you have like a first step of package with activities, with a conciergerie, taking for you some appointment, to call a taxi and so on. There is also one person of the staff sleeping in the residence during the night. So the price is quite good if you compare in the big cities the price for the studio without any services. So that's very important. After that, for sure, depending on the operator, he will provide more and more services. But for sure, like an hotel, the more you ask, the more you pay. We propose also a restaurant, cleaning the apartment, but it's not an all-inclusive, because we don't want that Domitys will be only for the upper class, if I can say that. Domitys must be and is affordable for everybody. So that's very important to understand. First step, rent with some common services, and after that, you could have whatever you want, step by step, different kind of services.
Of course, you have the a la carte services, but you also, I know that at Domitys and some others, there are some like packages that you provide. Can you just give some? You have given an average number of 1,000 for the initial package. Maybe like the, well, you give an idea of the second and third package, like including food for lunch and this kind of, just to give an idea.
Well, it's quite difficult to say exactly the amount, but to give you an example, when a senior is paying 1,000 euro of rent, he's paying also 700-800 of services. So it depends of the people. Some of them will go to the restaurant only for lunch, and they will stay at home because they have a full kitchen equipped at home for the evening. Some of them will have the cleaning of the apartment 3 times per week, 3 times per month. Some of them 5. But just to give an example to our guests, when the people buy for services, they will have, it's a 50-50, 1,000 for the rent and almost 1,800 for the services. And which is very interesting, is to see that the people are looking more and more for services. You know what I mean? When we started in the business 20 years ago, the people, they were able to clean the floor and etc. in their own apartment. Now the mentality has changed. They want to enjoy the life, so they ask for different kind of services. For example, last year we start to provide rental car, electric for sure, electric rental car, and it was a very huge success. A lot of people, they don't have their own car, but they still want to drive. So we have to to propose more and more services à la carte, as you mentioned, for sure. And the people love that.
That's interesting. I'm just going to share the results of a quick poll I did as well, which was, will senior housing be seen as a stronger sector post-COVID than before? Yes is 74%, no is 6%, and the same is 20%. So that reflects a lot of the things that we've seen in our other discussions as well, which have either been around countries or geographies where also senior housing, healthcare has come significantly more to the focus of investors, I think, during this point. There was a lot of mention there of cities and regions. If people are looking to invest, what cities and regions do you think would be most attractive at the moment? Let's stick with France, and then we can also open that out a little bit more into a comparison with Europe if we want. But Frédéric, maybe starting with you.
We have seen in the key results that the most obvious answer to your question, Richard, would be that the cities where we have seen the lowest level of equipment, would seem the most interesting to invest in. And Samuel was talking about Paris. Of course, it's the most attractive market. I mean, and I guess Arnaud will then say, okay, but the problem we have is the land prices. And so from a real estate perspective, you have the market opportunity in terms of the sort of the underlying customers. And of course, in cities like Paris, in cities like Nice, in cities like Toulon, you have the lowest level of equipment, and these seem to be the most interesting to invest in. On the other side, these places, and I guess it's the consequence of it, are the places, maybe less so Toulon, but maybe, Nice, Paris, of course, you have very high land prices, and actually not only high land prices, but scarcity of land for sort of, this type of products. We haven't talked about sizes, but a Domitys residence would be from 6 to 8,000 square meters. So it's not an easy thing to find in Nice, for instance, or even more so in Paris. So, and I think that's the utility of such a report, is to be able to integrate all these elements and then come out with a response that is going to be customized response to a given opportunity.
Okay, good.
Well, if I may say something, yes, I agree with Frédéric. The main demand is focused on the big cities. But just to give you an example, on the big cities, French cities, you have more or less 10% of the global population, which is 75 and plus, non-dependent or target. On small cities, it's not 10%, but 30%. What I want to say is that there are seniors everywhere, and also to be able to answer to the huge demand for the big city. We are now, which is very interesting and a little bit funny, we are now discussing with asset manager, because they in this big company, they've got always one or two office asset, which is no more really an office surrounding. And so now they are calling me, telling, well, Arnaud, we've got an old building for office in Paris, and we have the case right now. Could you study how to transform this office building in a senior living? And for sure, we succeed on different case. And now we are doing a huge refurbishment in Paris, and we will have a Domitys in Paris, a second one. So for sure, to find such a big plot is very difficult in Paris, but there are other ways to develop our business. And I say it was funny because my first appointment, maybe 5 years ago, with the investor, they are always talking about the worst case. What about the worst case? How to transform your senior living in a pure residential, which is funny now. That all the big company, all the big investor bought some senior living. So now it's no more talking about the worst case, but the opposite, how to transform an office building in a senior living due to the huge demand.
I'm just going to share these results of a quick poll as well, which is, do you see senior living focus more on city centre or suburban locations? So city centre is 32%, suburban is 32%, and both equally is 36%. So normally I don't announce a winner in these, but in fact, the people who voted both equally got it exactly right. So that's interesting. Just maybe also let's just do a quick comparative as well in terms of other European areas where you're working. How do you see France in comparison? And what are you seeing? Because I know you're active in different areas.
The French senior are almost the same that the German one and the Italian one. For example, you know, there is a picture. Everybody has got a picture in mind that in Italy, the grandma is living with the family. Well, that's no more the case. I'm sure a couple of 65 in Milano, they don't have la mamma at home. So the demand is the same. We open one residence in Bergamo. It's near Milano, north of Italy. We have a new very nice baby in Milano under development, and we have some project. We have also different in Portugal. So to be honest, it's the same thing everywhere. The old people, they don't want to stay alone, and the children are 65 maybe. They are scared about their mother alone in the big city, in the countryside. So the problem is the same everywhere. So the residence will be exactly the same. For sure, we adapt some small consideration due to the local things, but there is no huge difference if you take a picture from our residence in Bergamo or the one we have in Bruxelles, the one we have in Antwerpen. That's the same thing. After that, we adapt the proposal that we can make to the client, because, for example, in Belgium we include the breakfast with the rent. But you know, that's really a very small adaptation. The target are the same, the mentality is quite the same, and our business is the same. Take care about our clients as we would like people take care about our grandmother. That's the DNA of Domitys, if I may say that.
So this is from Guillaume Truong. Thank you for that, Guillaume. Why do you consider residence services as assisted living, whereas in the US, assisted living integrates nursing services, and Guillaume mentions helping with food or showers, but this is not always the case in France?
In the European sort of understanding would be, you know, I think senior residence, it's Betreutes Wohnung in Germany. It means, you know, sort of a residential building where, you know, catering for old people who have some frailty or some, you know, willingness to be provided with services. But these services would be, as Arnaud mentioned, you know, just sort of everyday services, but not sort of nursing services. You know, it's not the facility does not cater for, you know, people who are dependent. This is, if you get into that position, then you are into the nursing home. So I think, you know, again, it's a matter of words and choice of vocabulary. I think it is accepted. I'm happy to hear otherwise, that assisted living or senior residence in France is non-medicalized in France and Europe, and nursing home is medicalized, and the services you provided are slightly different.
We see in the hotel business that they're drifting to all-inclusive packages, which includes rent, food, spa services. I particularly like the idea that there might be saunas in some of these. Is there something that we should also adapt to the senior living hospitality sector instead of a la carte. So that's one question in terms of all-inclusive packages. And there's also one just come in from Vanessa. Hi, Vanessa Mascara, how are you doing? Good to see you here. Is the regulatory framework rent caps favourable versus other European countries? Similarly, are the planning regulations relatively more favourable? So interesting. Does anybody want to pick those up?
I think Arnaud has commented on the a la carte versus package. What they are trying to do as a minimum is is the rent plus a minimum amount of services. Then it's all it is a la carte, but then they have created, in most cases I think they have created sort of packages to make it actually easier. And I think what you mostly see is that you have the basic package plus the basic the minimum package. Then choosing maybe a separate package, either premium or basic, including food for lunch, for instance, and then you will have some other a la carte depending on the willingness of the person. That's on the first question, and I think Arnaud would agree. Maybe for timing purposes, I'll jump to the next one. I think planning regulations and are, as we know, quite strict in France. And quite slow, actually, and working in different European markets. You can see the difference. I was recently in Ireland, and planning could take only sort of you could move from T0 for just mastering the land to building completed in less than a year and a half. Where in France it would take you minimum of maybe 3 years and sometimes more. So yes, planning regulation is quite difficult. There is a whole theme about should senior residents be receiving a favorable, as in no parking, less parking, etc., etc. This is relatively still in discussion and depend on sometimes the city. There's no clear regulation, and I know that Arnaud and Domitys and some Sinerpa are trying to lobby to have a specific regulatory environment in terms of planning permission to be more favorable in terms of square meters you can build or sort of some constraints, lighter constraints, but it's not completely yet the case. In terms of rent caps, I would let maybe Arnaud, but I think it's not really the beauty of this is that they're not providing, it's not a lease contract that they are providing, but it's a service contract. So I don't think they get into these rent caps.
Yes, I think if you want to industrialize the senior living as a developer or an operator, you can't be focused on the upper class, the people that've got the maximum of money. If you won't achieve to create a portfolio. So it was a spirit of Domitys to make very nice residence, but almost, if I can say that, for everybody. That's the spirit. After that, we as Frédéric mentioned, we propose also some package. For example, the restaurant. You can take the restaurant package, and then if you rather go step by one to the restaurant, you will pay maybe €2 more than if you take the package. That's the main things. But I remember I went to UK and I visited a wonderful senior living residence, but in the countryside, and it was like a 5-star hotel. Wow, amazing! But the occupancy rate was only the 40%, and they opened, I think, 2 years ago. Meaning that if you try to propose a nice solution, but the price could be £5,000 or £4,000, for sure it will be difficult to have the residence fully let. So the thing is to go step by step and to have senior coming from everywhere, but with some affordable price, and to be able to customize for our client. This is not the nursing home. We have clients, the people have the choice to come to us or not to come. So we are pure private player. So we have to be very attractive and to be affordable for everybody. After that, concerning the different country, I saw some question about that. Yes, for sure. As I told you, I was yesterday in Belgium at Brussels, and in Brussels we have, for example, huge apartments, about 100 square meters. Very, very interesting. Why? Because we are in the heart of Brussels, and I remember the study. The study showed that we could have some very rich people, and they are coming from their own home previously. They want to come to Domitys, but to have almost 100 square meters apartment. So you have to be open for the people. You have to be warm with them, and each country is different, but always the same thing. Take care about all people in good condition.
So we had one from Ron van Bluis. Thanks, Ron, from HAVO, and of course the Senior Housing and Healthcare Association and Amsterdam School of Real Estate. Samuel and Frédéric, my sincere compliments regarding the initiative and unbiased in-depth research. Real example of first-class work. So well done, guys, for that. One question from my side. The aging demographics, facts and figures are clear and impressive, but could you give me your vision regarding the propensity to move or relocate? What are the drivers of relocation decisions? Because this is very important to clarify the actual demand instead of just the mathematical numbers. So that's one that I wanted to pick up. And the other one that I don't think we've dealt with properly yet is from Martin Zanowski, which is great. Thank you, Martin. Do you have big service fee differences between assisted living and nursing homes in the investment target areas, urban versus rural? I think we've dealt with some of the other ones around the different types of services, but feel free, anybody, to also answer live that by typing an answer if there's something that's more specific to that.
Of course, we have to look at statistics, and Samuel, and his team, they have to look at demographics and where the seniors are, and so how you expect them to grow in a given city. But it's true that this is only mathematical, and this does not take into account the fact that senior can relocate. I think what we have seen, and again Arnaud will comment, but is that senior, they tend to want to stay in where they have lived, in order to prevent, and it's actually even advisable that they stay where they have lived in order to prevent or to maintain the social links, to maintain the ability for them to still go out, do their shopping, see their friends, etc., etc. As Arnaud was mentioned, these are autonomous people, and we want them, and everybody wants them to conserve and to keep the social links. As we have seen as well, some of them have lost those links. And the other two element, I think, is that sometimes if they relocate, it's because it's getting closer to the children, and maybe sometimes they actually move to one brother, one sister, etc. And so I think these are the two big factors. I
will say only, why will they move? Because they will discover that there is a solution rather than the EHPAD, Maison de Retraite, meaning the medicalized residence. For the moment, I'm sure that even if the market is getting bigger and bigger, if you ask to an old woman down the street, do you know senior living, or do you know Villa Médicis or Domitys? Not sure that she will answer yes. So the thing is, the whole people are still thinking that the only way to move, if they need to move, is going to nursing home. And that's not the fact. There is a solution between staying alone at home and going to a nursing home. There is a senior living. So our job is to explain, to make a lot of advertising, to explain that there is a very good solution. And sometimes the people, they arrive at 75 years old and they will stay until 95, 100. So meaning that we need to explain to all this huge population that going to senior living will have for them maybe 20 years in good condition, with new friends, good restaurant. When I do some visit with an investor, at the end of the visit, sometimes the investors say, well, Arnaud, finally, it's like Club Méditerranée for the senior. So that's it. I think we have to explain the model, to make a lot of advertising, just to explain that this solution is very interesting. And then we'll see that the people will move because they will discover this kind of new solution.
On Martin's question, as we have seen, I mean, we're not really aiming for this exactly the same target in terms of people. So of course the service fee will be different. And it will be different. Why? Because in nursing homes, people are dependent. So they are in need also, not only of just sort of hotel and catering sort of services and assistant or conciergerie services, but also, you know, really nursing services provided by nurses, provided by aid nurses. And so, you know, typically in a Domitys, let's say a residence, you would have maybe 20 equivalent personnel. In a nursing home for 100 people, you know, you would have, you know, 50 to 60 equivalent full-time personnel. So, you know, you have more people in nursing home because, of course, most of the dependent people will need help even for, you know, to dress, to wash, to feed themselves, etc. So it's yes, the service fee is going to be different, and a part of it is going to be much higher in a nursing home, but part of it is going to be picked up by the Social Security through you know, a subsidy of the nursing home, and part of it will have to be paid for by the family or the resident. And I saw some question about, you know, private insurance. Again, in assisted living or senior residence, Arnaud will also comment, but I think you still don't have any insurance that is covering, you know, these type of services. So it's really mostly from the person revenue or patrimony, private wealth. In nursing home, you can have some form of private insurance covering some part of it, but still mostly it comes from the revenue. But of course, again, as Arnaud said, nursing home, we're talking 18 to 24 months length of stay. Assisted living, this is much longer time.
I'll just share the results of this for a second, which is what will help drive this sector in both France and Europe. And more product, interestingly, is 70%. More data and research is 57%. So I'm glad that through this initiative, at least we're driving part of that, which is good. And look forward to also the research on the German market, and gradually building up these areas of research as we can. In the meantime, I just wanted to say thanks to everybody for joining us. In terms of what we're doing next, on the 7th of July, there's a focus on Germany residential in German language. We've also then got on the 8th of July, part of our European Outlook series, we'll be looking at Greece and also then at European retail. On the 9th of July, we're taking a look at France. So if you're interested in the French market, we'll also pick up on that. And I'll bring some of the things that we've learned from this session also into that one. We also look at across Europe, the future of office, how we see that developing. And then on the 15th of July, as part of that session, we've also got one looking at the student housing sector, especially with Samuel as well and BONARD, and we'll pick up some of those topics. Thank you to the speakers, and look forward to seeing you next time. Thank you, everybody.
Thank you, Eric.